JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today is the 27th of February 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're gonna have a quick look at the markets, a few of the charts, the usual stuff. We'll have a look at some of the instruments that we looked at yesterday just to see how everything's getting along, and yep, a few interesting setups. So, but before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump in, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah guys, feel free to visit us here on jfdbank.com and click on the research tab right there. And yep, I believe you can find some useful information here. But right now, let's jump into the charts. Now the first one I want to touch on here, again, it's DAX. Now I've looked at DAX this week, and basically what I was talking about here was that if, especially yesterday, given the fact that we had a bit of a correction here to the upside, but what I was saying that if it continues to trade below this highlighted area here, roughly between the 12,886 and the 12,974 territory, if it continues to kind of balance below this, then yep, we could see another round of selling. Looking at the cash index right now, we can see that the price is back to the 12,480 territory, so it's basically roughly around here again, so not far from its yesterday's lows. We'll keep an eye on these, because in order for us now to get comfortable with further declines, we'd like to see a drop below this territory here, below the 12,368 zone, which is the low of yesterday, and then yep, and then we could target further declines. For now, given, like I said, given that we are quite steep here, we had a quite steep downside, then we'll be very careful. We'll yes, we will continue aiming to the downside, but ideally we would like to see a break below the yesterday's lows, because this way, of course, as you understand, the index would confirm a forthcoming lower low, and yep, more sellers could be joining in here. The next area of support to consider, let me just quickly put this one on the chart. So we could keep an eye on this little gap here, and we could keep an eye on this 12,202 to 203 territory, or a little bit lower. We do have the this little high here, the inside swing high of the 9th of October of last year, and that's roughly around the 12,165 zone. If it does get here, we'll reevaluate everything again, but for now, yes, we will be aiming for the downside, but in order to get comfortable with lower levels, we would like to see it drop below 12,368 territory, so keep your eyes on that one. In terms of the upside, pretty straightforward. We would like to see a move back above this highlighted area here before we could consider maybe slightly higher levels. DXY, another index, but this one is a dollar index. So yesterday I talked about this one, and I was telling you guys to keep a close eye on this little short-term downside resistance line. So during my trader's tea time, the index managed to travel to the upside here, and managed, as you can see, yesterday managed to test this downside line again, which it failed to break, and yeah, we saw another slide here, and now we're seeing this area here getting tested, the low of Tuesday, and that's roughly around the 98.88 zone. So although we did this morning already have a bit of an overshoot here, nevertheless you can see that still the bulls are fighting it, trying to resist this and trying to keep the index above this barrier, as basically the same as it did here in the beginning of this week. Now, for now, of course, from the very short-term perspective, we are leaning more towards the downside. We would like to see that strong move below this 98.88 zone, and then, we could target areas like the 98.7170 zone. Let me just probably adjust this slightly. There we go. So 98.71. So that's the area we're going to be targeting initially, but slightly below that we do have the 200 EMA here on the 4-hour chart around the 98.55 territory, so which could be tested as well. So that's why, guys, for now you can see that the bears are really trying to fight this one and trying to drag the index further down. Again, as I've mentioned previously, as long as we remain below this downside line here, then yes, we will continue targeting the downside in the near term, because don't forget that still we do have this upside support line taken from the low of the 31st of December, and in a way the downside might get limited near this upside line. So that's why something to consider. But again, from the very, very short-term perspective, we are leaning more towards the downside, unless this suddenly starts pushing higher and breaks this downside line and climbs above this barrier here, the 99.23 zone, and then we could consider the upside. Bitcoin Cash. Now, I looked at this one yesterday, and actually I was talking about this one this week, and what I was saying that if we have a drop below this territory, then this territory here below the 354.55 zone, then we will aim for that psychological 300 level, which we managed to reach yesterday. So perfect hit, and from where the crypto rebounded, and you can see now it's kind of trying to climb a little bit higher. Now, don't get me wrong, given the fact that we already had a decent slide here and a nice rebound from the psychological 300 level, then we may see maybe a bit of a larger correction to the upside. And the reason why I'm talking about correction is, and let me just put this one on the chart very quickly, the reason is because we are still trading below this downside resistance line. So, and that's taken from the highest point of, oh sorry, not the highest point, but the high of the 15th of February. Now, something like this, guys, could be possible, something to consider, and in a way, if we get a bit of a correction here, as long as it remains below this downside line, we will continue targeting the downside. In case this decides not to travel straight to this downside line and decides to reverse earlier, keep your eyes on that psychological 300 level, or even better, the 296 territory, which is the low of the 24th of January, and then nice good drop below this would confirm a forthcoming lower low, and lower levels could be met, guys, for now. If everything's kind of leaning still more towards the downside, but from the very, very short-term perspective, keep your eyes on this area here, and we may see a bit of a larger correction here, and maybe somewhere a push towards this area. But basically, long story short, as long as it remains below this downside line, we will continue targeting the downside. NZDJPY. Now, I've looked at this one. I've picked up on this pair this week as well, and what I was telling you guys, that if we get a drop below this little area, the 69.92, then further declines are possible, and the next level that we're going to be targeting will be the 69.25 zone, which is the low of the 20th of November. So as you can see, we got a nice drop lower. Also, in addition to that, also the weakness in the NZD got fueled a little bit, by the slightly bad data coming out from New Zealand, that came out from New Zealand overnight, and so the business confidence kind of came in very low, and well below the expectation. It was already in the negative zone, but still it came out even worse than that. So this kind of might have helped NZD to drop against a bunch of its major counterparts, and including Japanese yen here, and the Japanese yen here, of course, is also strengthening on the whole coronavirus issue. I mean, it's finally now taking kind of taking its role as a safe haven. So for the time being, of course, but for now, looking at this technical picture, yes, we can see that we managed to reach our target here near the 69.25 level. We will continue aiming lower, although we could see maybe a bit of a correction here and a correction to the upside. But if it's, let's say, struggles to push back above this territory here, the 69.92 zone, then yes, we could see another round of selling. So, but for those who are more on the cautious side, you could continue observing this 69.25 level, because a nice good strong drop, and to be honest, ideally we would like to see a close at least of a 4-hour candle below this area in order to consider further declines. And because as you can see, we do get these breaks here, but neither of the 4-hour candles are still willing, or should I say, showing willingness to close below it. So keep your eyes on this barrier, wait for a nice good close of at least of a 4-hour candle, and then yep, we could start targeting the other target here near the 68.85 zone, which is the low of the 14th of November, and if I'm not mistaken, actually also the lowest point of November of last year. So something to consider. USDCAD. Now, I looked at this one yesterday. I looked at this one yesterday, and basically what I was talking about was that in order for us to kind of aim for higher levels, we needed to see a nice good push above this 1.330708 territory. We got that push, we got a test of our targets here, the 1.3328 and the 1.3348 zones. I've talked about this one yesterday basically, and as you can see, we are currently getting a hold up near this this 1.3348. and by the way, just let me remind you that those levels here, the 1.3348 is the kind of the highest point of October of 2019. So as you can see, we had a nice hold up here, getting a bit of a correction here. Already had a bit of a correction back towards this the previous highest point, near the previous highest point of February, near the 1.3328. And the big question here is right now, can we continue pushing higher? For now, yes, we will target the upside. Let me just jump here like a little bit. So we will continue targeting the upside. Our next level here will be the 1.3382 territory, and that's basically the highest point of September 2019. So for now, for those who are more on the cautious side, you could just basically wait this one out, wait for a push, a pop above the October high here near the 1.3348, and then yep, aim for the 1.3382 zone. In terms of the downside, well, it's also a bit of a tricky one, because even if it, let's say, decides to travel lower, I mean, any pullback could be seen as a temporary correction before another leg of buying. But in a way, what we could try to maybe play this one out here is if we see a drop below the 1.3307 territory, this in a way could also drop below the 21 EMA, or in other words, actually you could wait just for a first drop below the 1.3308 and then a drop below the 1.21 EMA here on the 4-hour chart, and ideally we would like to see a close at least of a 4-hour candle below this 21 EMA shown as the yellow line here, then yep, we could aim for a bit of a deeper move lower, because as you can see, we did get these little false breakouts below this 21 EMA here recently. So that's why we would like to see at least a close at least of a 4-hour candle below this area, and then yep, it could increase the chances of a further drift to the downside. Now jumping into another another pair, GBPUSD. I looked at this one yesterday as well, and what I was telling you guys to keep a close eye on some of these lines. Now, the main line here is the 1.975354 zone, which is the high of the of January, and you can see that yesterday we did get an overshoot here, but it failed to close above it. So we still need to see something like that. We still need to see a nice good close above this 1.9754 territory, which is the highest point of January, and only then we will target the upside. Of course, don't get me wrong, for now we're trading above some of these upside lines. This short-term upside support line taken from the low of the 14th of January, and of course this this very short-term, very steeper one upside support line. It's a little bit tentative, I do understand that, but still, for now, as you can see, it continues to respect it. We did get a slide a little bit lower here yesterday, but it failed to drop below this, and now it's trying to make its way higher again. But again, as I said, to get comfortable with this, we would like to see a push above the 1.9754 territory first, and ideally we would like to see a close at least of a 4-hour candle above this area, and then we will aim for higher levels. In terms of the downside, again, if we see a drop below the yesterday's low here, a break of this upside line and drop below the yesterday's low near the 1.9654, then yes, we could see go for a deeper correction to the downside, because we're still above this upside support line taken from the low of the 14th of January. And the last pair for the session is going to be the euro dollar. So fantastic move. This is what I talked about yesterday, and yep, working out nicely for now. So basically, my idea was yesterday here that although we did get a drop below this, back below the 1.0878 zone, it still remained above this short-term tentative upside support line, which, to be honest, no longer is a tentative. It did have 3 touches here, and almost a 4th one, and continues to and the rate continues to respect it. So we had another rise above this 1.0878, so which is perfect, and is working out nicely for the bulls now. And yep, we managed to push the rate here above the 100 EMA on the 4-hour chart. So now what we're aiming here for is, of course, this area around the 1.0940 territory. First, of course, keep your eyes on the 1.0925. That's the high of the 11th of February and the 12th of February. But slightly above that, we do have that 1.0940, which is the low of the 7th of February, and around there, not far from there, we do have this 200 EMA on the 4-hour chart, so could get tested as well. So keep your eyes on this one. For now, we're more bullish than bearish. Even if, let's say, if it travels a little bit higher, tests this 1.0925, and then decides to retrace back down, still, as long as it stays above this short-term upside line, we will continue targeting the upside. And in terms of the downside here, now if it suddenly starts dropping below the this 1.0878 zone, which is the lowest point of 2019, if it drops below this and breaks this upside line, and then also falls below the 1.0863 territory, then yep, we will aim for the downside here, and we could aim for the current lowest point of February near the 1.0777. So yep, keep your eyes on that one, and that's why probably I can lift this arrow here now, because we already had a decent uprise. So we can shift the arrow a little bit higher here, and basically this could be our alternative scenario, because previously I was looking at the 1.0777, but that was understandable because we were not far from this level still. So now we have moved away, and we've created a decent area for a nice alternative scenario here. But for now, of course, we are aiming for higher levels. Keep your eyes on the 1.0925 and the 1.0940 for today, and also just in case this little 200 EMA here on the 4-hour chart shown as the black line. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on, my trader's tea time today, 14:15 GMT. For now, I hope you have a beautiful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.